Hey everyone, in this video I'm going to update my buy recommendation for Snowflake stock. Coming into the quarter, I did not have Snowflake stock rated as a buy, even though the company is an excellent company with solid growth prospects. I thought the valuation was too expensive. So after these quarterly earnings results, I'm going to review it, compare it with its valuation, and answer again and update whether or not I think the stock is a buy, hold, or a sell. So without further ado, let's get right into these quarterly earnings results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the important things to remember with Snowflake stock is the way it recognizes sales and the way it recognizes contracts, right? So let's get through this and so we can get a bigger picture understanding of how the company recognizes revenue. So the first step in their process is to book a sale or to sign a contract, right? It meets with the client. The client understands what Snowflake has to offer, and the client says, okay, I want to be a part of what you're doing. So they sign an agreement that says, all right, we're going to spend $100 million in 2024. Okay, so the client signs that deal, gives Snowflake $100 million upfront, typically upfront cash payment, and then throughout 2024, that client will use Snowflake's services. And as they use Snowflake services, that turns into revenue. So initially, when Snowflake books that sale of 100 million, does not recognize that as revenue. It cannot recognize that as revenue. It needs to wait for the client to consume those services, then it turns into revenue. Now they will eventually turn into revenue, that 100 million, but it needs to recognize it in the period where the consumption happens. So there is a mismatch between when Snowflake gets cash and when Snowflake recognizes revenue. For that reason, I've highlighted here remaining performance obligations is a critical metric for investors to follow with Snowflake and Snowflake stock, because this indicates how much contract value Snowflake has booked and how much is going to potentially turn into revenue over the next 3, 6, 9, 12-month time periods, right? So this gives you an indication of what its revenue is going to look like, and so it's an important metric when you're looking at Snowflake stock. So in the third quarter, Snowflake reported 32% year-over-year revenue growth to 734 million. That was up from 557 million from the same quarter the prior year. And noticeably, Snowflake has increased its revenue incrementally every quarter for the last 4 quarters in a row. However, the revenue rate of growth is slowing down. You can see here that in fiscal year 2023, Snowflake grew revenue by 69% year over year. And then in fiscal year 2022, Snowflake had grown revenue by over 100%. So revenue growth rate of 100% down to 69%, and 2024, fiscal year 2024, is looking to be much slower than even fiscal year 2023. So two things to say about that. Number one, it's obviously not encouraging to see a company decreasing its rate of revenue growth. But number two, it's understandable as a company grows larger and larger that the rate of revenue growth slows down. No company can grow at a rate of 100% year over year to infinity, right? It's going to slow down as it gets bigger. The law of large numbers starts to come into play and the revenue growth slows down. So I mentioned earlier that RPO, remaining performance obligations, is a critical financial metric for Snowflake, and investors can be encouraged by what Snowflake has demonstrated. Let me explain what I mean. So from the fourth quarter of fiscal year 2023 to the first quarter of fiscal year 2024, Snowflake actually saw its RPO decrease. However, at the second quarter of 2024, Snowflake reversed that trend, and now in the third quarter, it continued higher. So when Snowflake reported this decline in the first quarter of fiscal year 2024, there was a big concern from investors if this is now starting a new trend downward. Thankfully for Snowflake stock investors, the company turned this around, and now they've returned to increasing RPO for 2 quarters in a row. from 3.4 to 3.54 billion up to 3.7 billion in the most recent quarter. So that is an encouraging sign that Snowflake has turned this back upward and has started a new streak upward, and it wasn't a one-time tick upward and then a trend back downward. That's important. That's a good sign. That's good news for Snowflake stock investors. Another good sign, or is it a good sign for Snowflake, is that it's adding 52% more in customers that are spending over $1 million in product revenue. You can see here, they now have 436 customers that spent over 1 million with Snowflake. That was up from 287 in the same quarter to last year. And that was up by 35 from the previous quarter, so quarter over quarter. Now, the reason I say, is it really good news? And I would say, if I was a Snowflake investor, I would prefer perhaps Snowflake spreading its customers across wider, broader scale rather than narrower with higher spending. And the reason I say that is because customers that spend over 1 million, and you're going to have some in here that spend over 10 million and maybe over 50 million, they're going to have more negotiating power. They're going to have more negotiating power. And they can tell you, look, I'm going to spend 50 million with you. Give me a 10% discount. Give me a 15% discount. And if you're Snowflake, it's going to be hard to turn that down because that's a big chunk of revenue. But if you've got 100 different businesses, each one spending, let's say 500,000, each individual one of those customers has little negotiating power against you. And so you can generate better revenue, better terms with these smaller businesses than you can with these larger businesses. Here's another critical metric that I look at with these software companies, and that is the net revenue retention rate. This shows how much a customer spends with Snowflake in 1 year compared to the previous year. So a figure over 100% shows that a customer spent more this year with Snowflake than they did last year. The reason why I think this is so important is because it shows me the customer value proposition. If Snowflake is delivering good value to customers, then those customers will increase their spending with Snowflake, right? They get good value and they say, well, let's spend more with you because the money that we did spend brought back such good value, so let's increase that spending with you. But a number below 100% indicates the opposite, that customers are decreasing their spending with you. So two things to note here with Snowflake's net revenue retention rate. The 135% figure that they reported in the third quarter of 2024, fiscal 2024, is a solid number. No doubt about that. That means customers are spending 35% more with Snowflake in this quarter than they did in the same quarter last year. However, there is a bad sign here, and that is the continuing decline in the net revenue retention rate. You can see that it peaked at 178% in the fourth quarter of 2022, and it has decreased for 1, 2, 3, 4, 5, 6, 7 quarters in a row. That is concerning. That is concerning. A 7-quarter consecutive streak of declining net revenue retention rate. This is not a good sign. This is a bad sign from Snowflake here, showing that their customers are still spending more, but that rate of increase is decreasing, and it raises concerns like, how much further is this going to go? How much further will this go? How much lower will this trend continue? And so this is a risk. This is something that I've been paying attention to with Snowflake stock over the past year or two. And this, while this might not be a big deal for most companies, for Snowflake, I pay extra attention to this because the stock is trading so expensively. And when I'm looking at an expensive stock, I'm looking for everything to be perfect because the price is priced for perfection. And so when I see something that's not perfect, it raises concerns, it raises question marks compared to the valuation. So here's what Snowflake stock investors are enthusiastic about, and that is management's forecast that it will reach 10 billion in revenue in fiscal year 2029 compared to the 2.6 billion it is expected to achieve in its current fiscal year. So that's nearly 4 times the revenue it has now. A phenomenal growth rate, to be sure, and Snowflake expects to achieve that with 25% operating profitability and 30% free cash flow margin, which would be solid numbers. That would be solid numbers if the company hits these targets. And so this is what has investors excited about Snowflake. And given the rising effectiveness of artificial intelligence and how critical a role data plays in artificial intelligence, it's reasonable to assume that Snowflake will approach this target, even if it doesn't precisely hit 10 billion. It's reasonable to assume that it'll be approaching that target near the end of the decade. And so this is what's exciting about Snowflake stock, is its incredible potential in the long run. One of my favorite things about Snowflake stock, and I'm surprised they have it hidden here in the fine print towards the end of their quarterly presentation on slide 36 out of 38, is the company's GAAP cash provided by operations. This is how much cash flow the company generates in its regular day-to-day operations. And this figure has been improving very nicely. You could look at fiscal year 2021, this number was at negative 8%. In fiscal year 2022, it jumped to 9%. And in fiscal year 2023, it jumped to 26%. And in so far fiscal year 2024, in the 3 quarters, they generated 48% in Q1, 12% in Q2, and 16% in Q3. Remember how I mentioned that typically companies pay Snowflake upfront for their yearly consumption, and that's why you see a bigger number here for Q1 than you do for Q2 and Q3 for Snowflake. Nevertheless, fiscal year 2024 is shaping to be another excellent year in cash flow provided by operations for Snowflake. I know a lot of investors are downbeat about Snowflake because of the losses on the bottom line. The company is not profitable, but it is generating strong cash flow. It is generating strong cash flow, so the business is self-sustaining already. Doesn't need to go to investors to ask for more money. The reason it doesn't generate profit, but it does generate strong cash flow, is because of significant non-cash expenses like stock-based compensation. So now that we've looked at the quarterly earnings update, I wanted to look at the valuation. And as I mentioned, Snowflake stock is expensive. It's trading at a price to free cash flow of 98. 98. That is expensive. And for that reason, I have kept Snowflake stock rated as a hold, and even after these quarterly earnings update that were, for the most part, really good. For the most part, Snowflake delivered excellent quarterly results. I still would not be willing to pay a price to free cash flow of 98 for this stock. I would not be willing to pay a price to free cash flow of 98. So I'm keeping Snowflake stock rated as a hold. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.